Okay, this is section 35. This is the last of the sections of IFRC SME. I think we should have covered this along with the conceptual framework, and not necessarily we have to follow the order. So this standard for SMEs is about the transition to when they come from another framework, reference framework, to the IFRS SMEs, be a local framework to the NIFU, or from any other framework to fully adopt all the standards for SMEs. So in this standard, this is the content of the IFRS SMS. There's the first time adoption of the IFRS SME. What's the procedure for the preparation of the P&L statements in transition? This applies to an entity that adopts for the first time the IFRS for SMEs, regardless of the former accounting framework. Also, it applies to the entities that have already applied the standards in a former period, but in their more recent P&L statements do not have the explicit display of the compliance with these. You can say that you may adopt them, but you never explicitly display that this is the first time adoption to this standard. If I applied it 1 year and the next year I didn't, anyways, I would apply them. So the financial statements are the first annual ones. Let's say that in September I decided to adopt the IFRS SMEs and I am eligible. So I'm eligible, I adopt SMEs, and I will adopt them as of now. So the first financial statements, if I close on the 31st of December of this year, but if my cutoff date is the 31st of August, and I start the new operations, so in September we will apply it as of the following annual cycle. So the entity have explicit declaration with no reserves of the content of the financial statements for SMEs where they do not presented the first financial statements. When they did, it could be the first time they presented under other standards, with local standards that are not consistent with the aspects of this standard, or they presented the most recent P&L. So this would apply to this. This is the, let's say, when we need to do this in a prospective or retrospective way. What do we need to change in order to do this? This should be applied. They do not recognize assets and liabilities that the standard does not allow. For example, in the former statement, I was able to recognize an asset and liability, and if this new standard does not recognize them, so I will not be able to include them. We need to reclassify all the items recognized in the former framework, like an asset, liability, and capital of a different kind, to the one of this standard, and also to apply this standard when measuring the assets and liabilities recognized. Once that I integrate myself as a company to this standard, I would like to display and present each and every one of the standards, my assets and liabilities and the P&L statements according to all the sections from 1 to the 34. So the ones that come from the transition, it will be recognized in the accrued earnings. So this is very important.
Because remember, once I have my worksheet, those are the financial statements and adjustments to have balances according to these SME regulations. Everything resulting as a change in regulations should go to results. And the procedure, I don't know how this could be gone. And in the previous framework, if I had disappeared financial liability and assets accounts, I cannot reincorporate them, because then I would have to modify accumulated results. Now, hedges or coverage, discontinued, sharing participation, government loans, all these will have to change. So it could be with the previous balances, because obviously, as I said, there are some different bases. Accounting estimates had different bases to do these estimates. Obviously, we are not going to change this in retrospective. Now, exemptions. I am exempt of applying the section 1926/30. You can see here which are those exceptions, but not forever. Probably an exemption that you are not applying section 19 as business combination, but you will have to do it one day. But in this first year, it is allowed for you to do it. What else can I exempt? Well, this is going to give me the opportunity not to do this in this first year. Liabilities, leasing, some fees, serious hyperinflation. And I highlighted this here. When it is not practical to make some adjustments, it will be done in the first practical period. This situation will be identified, and moreover, it has to be revealed. Very quick, the explanation of this part in the regulation for financial statements. The explanation should not be missing, and if this has been applied in a previous period, why it stopped and why it has been reincorporated in retrospective, as I mentioned. Reconciliation, description of the nature of each one, patrimony of each date from the transition to this regulation in the final period with the previous regulation, and reconciliation between financial statement results. If there were any errors, they have to be highlighted. We're not going just to summarize. It's not that I'm just going to take advantage of this. If there were errors in this previous framework, we need to divide it, saying that there were these adjustments. The fact of not having presented financial statements as well. Well, as we can see, we are done with this section for SMEs.